All right, I'm here with Noah Rosenfarb, 3-generation CPA. You're the only guy I've ever heard about that who says that. Noah saves people a lot of money, millions of dollars on taxes, and you're working with the 1% or maybe more elite of 1%, maybe. You also help people with passive investments in real estate, where I've invested in a couple of those. And you're married, and you've got 2 kids, and you're originally from New Jersey. Let's see if I remember stuff. And you live in South Florida now. But you've been here. You've been here since before COVID, which is rare.
Yeah, I came when my older son was about to start kindergarten and my younger daughter was born.
And he's
now a high school senior. Yeah,
wow. So
college.
You've been here a good amount. By Florida standards, you're almost a native because nobody's a native here. All right. So what? You're not just a regular CPA. You don't even practice yourself anymore.
Right. I don't file tax returns for anybody.
Right.
So,
but what did you did you get a job in that? Did you work for
So my father is an accountant, and he had a small accounting firm that he had started when he was, 25. And he had grown it to 12 people when I joined. He'd been in the business for 25 years, made a nice living, had a great little business, and he wanted to grow it. And I thought it would be fun to help him scale that business. So I joined him. We did a series of acquisitions. We grew to 70 people, 15 million in revenue. And he wanted to sell. I didn't want to buy, so I left the year before he sold it.
And that's when you left here, or did you go leave and start a business?
I left and started a business. So when I was practicing accounting, I had kind of 2 unique areas of expertise. One was we had a very small traditional accounting practice filing tax returns for people, and I wanted to help them create more value to their business. I didn't really care so much about the tax filing. I thought my job's to help you make more money. And so I became what would now be called an EOS implementer. I started implementing strategic plans for our small business owner clients. I would take their management team away for 2 days. I would help them come up with their strategy. And then I'd meet with them every 6 weeks to help ensure that they stayed on track to implement. And that was really fun. I'd help them then sell their business. And that was a really fun part of my practice, totally unique.
But this wasn't just accounting.
No, it was an accounting firm.
Yeah, but you were you helping them with like HR and hiring?
Yeah, all that stuff.
Mindset?
Yeah.
Really?
Yeah. It was more of a personal interest thing. And when I was in my college fraternity, one of our alumni came back and helped us develop a strategic plan for our undergraduate college fraternity. And the plan was to be the largest fraternity on campus in 5 years with the best house. And 5 years later, that's what we did. And so I saw the power of intentionality and coming up with your strengths and weaknesses and opportunities and threats and having goals and, measuring them every quarter to make sure you're achieving them. And so I basically adopted the system that alumni person had introduced me to, read a bunch of books, and then I went out and implemented it with our accounting firm clients to great success. And that was part of our business. And the other part of the business that I was helpful in was we became the largest divorce accounting firm in New Jersey. So I was working for the partner in that part of our practice, testifying as an expert witness in divorce court about how much people were making and what they spent it on and how much their businesses were worth, and ultimately helping families figure out how were they going to resolve their divorce case. So I did that for about 1,000 families and, learned a lot in the process. But I never really thought I was going to stay in accounting, and I ended up staying there for 9 years. So it was a good run. But when I left, I started a family office for divorced women.
Why divorced women? How did you see a need?
Because I was testifying in divorce court, I had, just in the practice that I was a part of, we'd have about $200 million trade hands between husbands and wives. And many of those clients that I was working with, what we would call the non-moneyed spouse, often the stay-at-home mom whose husband was a hedge fund manager or an entrepreneur, they'd get this settlement and they would be clueless. They'd have to take on this responsibility for the first time in their life. And what I saw as an accounting expert witness was that often people were preying on that opportunity So you'd have the Morgan Stanley broker or the UBS guy, and they would, kind of hone in on this potential target customer, and they would overcharge them, and they would do things that I thought were inappropriate. I had one client, she had a boyfriend, and the boyfriend scammed her for a couple $100,000, made her buy a business. And so I went to the lawyers that I was friends with that would refer me to their clients. I said, listen, if I became a financial advisor for divorced women, and I did their tax return, and I helped them pay their bills, and I negotiated their car leases, and I made sure that they had their monthly budget, and I did their investments and their insurance and their estate plan, would you refer me those clients? They're like, of course. So when I left my dad's accounting firm, I left as a partner, so I owned a very small stake, and I started from scratch a family office for divorced women. It was one of the first in the country.
Did that take off in the sense that become a thing after?
Yes. So it's since become an industry. So I was one of the pioneers of that industry. I ended up, before I sold my business, I sold my intellectual property to other financial advisors around the country. So I had a series of lectures that I had developed and tools and strategies that I would use for my clients. And so I basically went around the country virtually. People licensed my material, and then they could rebrand it in their local market.
How old were you at this time?
I was 30 when I started that business.
Fantastic. Were you in New Jersey still all this time? What brought you to Florida, and what did you do when you got here?
Yeah, so my wife and I like to play a game called the lottery exercise, where we buy a lottery ticket and we think about what would change if we won. And one Christmas time, we were down with our son Jared. He was 9 months old. We were walking along the Hollywood Broadwalk, and we bought a ticket at one of the bodegas. And
you were here visiting?
Here visiting. My in-laws had a place on the beach in Hollywood that they would rent out, but we got to stay there for a couple of weeks. And I was walking down the boardwalk with my grandfather, who was alive at the time. He lived right nearby in Hollandale. And my wife's grandparents lived in Sunrise, so we had family here. This was a place where we would vacation, to see family. And we're walking on the boardwalk. It's Christmas time. It's beautiful weather. Our 9-month-old son is hanging out by the pool. And I was thinking, if we won, I'd live here. If we won the lottery. And then, the great value of this exercise is always to figure out, well, do I really need to win the lottery to live in South Florida? Is that what it would take? And so Amanda and I started going through what would it really take for us to move our family here. And it took us a while to figure out the business side of it, the logistics side of it. We didn't really want to be far from her parents who lived in New Jersey, but they had told us they were moving here. They still haven't moved yet, but, maybe one day. And so within 4 years, I was able to basically move down here with the family, which at that time it was 2 kids. And I commuted back to New Jersey at first, every other week for 2 days. Then it was every 3 weeks for 2 days. Then it was once a month for 2 days. And finally I was like, this isn't for me. If I won the lottery, I wouldn't be flying up to New Jersey. So let me sell the business. And I sold that in 2014.
And what'd you start doing? Now you're down in South Florida, sold your business. Now what?
Yeah. So I had in my mind, because of the entrepreneurs that I'd helped sell their companies, I had in my mind that I could really provide them with value through that transition. So I had started a podcast in 2012, interviewing entrepreneurs who sold their companies and the advisors that helped them. And the goal was for me to write a book about best practices to how to exit healthy, wealthy, and wise. And so after about 1.5 years, I wrote that book. And I went around South Florida talking to owners and basically got the same feedback from all of them. Like, oh, this is awesome. Yeah, call me in 5 years. I'll sell in 5 years. And after about 1.5 years of feeling like I was getting rejected because I was basically selling vitamins and everyone was like, yeah, I'll take them at some point. So I stopped. Yeah. And I was just a passive investor in a number of businesses. I was a real estate investor and living off my investments for the most part.
And does that get you to where you are today, or what else?
No. So what happened was I started volunteering my time for organizations that I care about. So my wife and I have kind of a core approach to our philanthropy. We focus on Jewish causes, education, and food security. And so there are a few local organizations where I was volunteering to see if I can make an impact in our community. And 2 years into that exercise, I was like, this is a waste of time too. And
why?
I just, nonprofit organizations do not operate the same way that entrepreneurs operate a business. And I wasn't being effective, and I was sitting in a room with 20 other people and feeling like I just wasted an hour of my time. Nothing that I can bring value to this situation is what's going to be able to come out of this situation. Things weren't moving forward. There wasn't accountability. And so I was like, man, what am I going to do? And it just so happened that around that same time frame, some of our EO members were asking me for tax advice. Can you tell me what did you do? Can you look at am I doing anything? And I came up with a list of 23 overlooked tax strategies. And I started handing it out. And then people were like, can you talk about this? And so I started speaking to EO chapters about how entrepreneurs can become better tax strategists. How can they think more clearly about how they want to file their tax return? And after I'd give a talk, people, oh, can you help me? Can you help me? And I was like, I'll go for a walk with you one morning, or we could do a walk and talk, I'll call you and we could brainstorm. But I didn't have a team. I didn't have any infrastructure. And then summer of 2018, I guess it was, my wife and I were in Martha's Vineyard and just kind of like sitting there. And I was thinking, the people I would help most if I won the lottery were entrepreneurs. And like, why aren't I helping them? Like, what was preventing me from helping them? And I think it was my fear of being committed to doing things that I ultimately wouldn't want to do and having to prioritize work over other things that were important to me.
You didn't want a job.
I didn't want a job. Yeah. And so then I kind of reframed it and thought, if in the long run, my goal is to make an impact on the world, what a better way than to help these people who I care about. I think entrepreneurs are heroes. They're the ones that create value. They're the ones that employ people. They're the ones that innovate. And so if I could support them in helping them achieve their goals, ultimately the ripple effect of that is much greater than what I was thinking I was going to do in philanthropy. And so I decided to kind of put my big boy pants on and give myself this challenge of building a business. And now I got started late 2019. Now maybe it's 4.5, 5 years later. I've got a team of 20 accountants, lawyers, and financial planners, and we're changing the lives for lots of very successful entrepreneurs to help them become what I like to call rich beyond money.
Yeah, you're definitely doing that. You've helped me, and you've helped a lot of people I know. You mentioned you were in Martha's Vineyard. Was getting away on a vacation, is that what gave you some clarity? What was the significance that you were somewhere?
I don't think it was being away. I travel a lot, and travel's always been something that I really enjoy and prioritize. I think what it was, I was often summertime for me. I take the summers off, and so summer's all pleasure. And because that allows my mind to like wander and think more thoughtfully about, okay, I know I don't want to just have, pure gluttonous pleasure all year long. The summer's kind of my time to enjoy freedom of movement and those types of things. And it gave me the space to think about, okay, how would I spend the school year? Because my kids were still... they're still right now at home in school. And so I'm tethered to their calendar. And I've always kind of committed, like, I'd only really work on school days. So that's been my rule for quite a long time. Like even in retirement, if I was going to do something that somebody might refer to as work, I would only do it on a school day.
So I know you very well. And I know your relationship with your wife, Amanda. And you're one of those guys that is in love with his wife as much as I am with Jessica.
Yeah.
Which is rare.
Very rare.
Because you always hear about problems. Oh, my wife, and you and I don't have those issues. What's marriage like for you?
I attribute the majority of my success to choosing the right partner, because I think without Amanda, my life would not have the same sense of balance, because I was solely focused on making money. I love money. I was passionate about becoming wealthy. That was kind of my number one goal, my sole focus. But through our relationship, and we had the good fortune of meeting as teenagers, we met our sophomore year of college. So we've been able to grow up together and become parents together and, really mature together. And her perspective is very different than mine, but our values are the same. And so what that's enabled me to do is kind of learn from her approach, and we're very yin and yang. So it's been a wonderful way for me to always test kind of my own opinions, values in stone, opinions in sand kind of concept. So
yeah. Okay. And you've got 2 kids. You get to choose your spouse. The kids, you don't choose how they come out. How have those challenges been? Because every couple has challenges with kids.
Yeah.
What's that been like?
Now we have a teenage son, 17, and a 14-year-old daughter. I was just sharing this morning with someone, so our 14-year-old daughter, Eden, it has not fit any of the stereotypes of what people talk about with teenage girls. And in fact, next year, when Jared goes off to college for his first year, she's agreed to travel around the world with us.
For the whole school year?
For the whole school year. She's going to get homeschooled, and we'll travel from when Jared leaves for college to when he comes back for Thanksgiving. And then we'll travel again when he leaves for his spring semester until he comes back from that semester. So we'll have 12 weeks on the front end, hopefully in Europe, and then 13 or 14 weeks on the back end in Asia. So super excited about that. She's been a real pleasure the last handful of years. And interestingly for her, our greatest challenges were when she was 6, 7, 8, mostly food related. She's vegetarian. My wife's vegetarian as well. But in addition to being vegetarian, she's a picky eater. Oh boy. And so it's always fighting over food. It was just really annoying.
She found a balance?
Yeah,
now?
I think we just kind of recognized that, she's going to eat white flour and and sugar, and it's a battle we're not going to win.
Yeah.
And then with our son, interestingly, I would say he's followed that traditional teenage kind of progression. He's a wonderful kid, and what I always tell him is, Jared, I never have any concern when you leave the house that you're going to represent our family well. It's just when you're in the house, you treat us like garbage. And I think it's just the teenage years, and, I'm hoping that over time, I know he's a good kid. I know he's got a good brain. And I've always told him that's his best asset is a good brain. He likes to complain that he's not as athletic as he'd like to be. But he's playing his best soccer his senior year of high school. And so I'm happy for him about that. But yeah, parenting a teen has been incredibly challenging because there's no KPIs. So in business, it's very easy to measure success because we have money as a metric, and we have customer satisfaction as a metric. We have employee retention as a metric. In families, I'd like to think I'm doing a good job as a dad. And when I ask Jared for feedback, he'll tell me, no, you guys are doing fine. You guys are fine. Don't worry about it. And we've had outside family meeting facilitators come in and do family retreats for us. And, we've tried to do work as a family on how to be a healthy family. And he says we're doing great, but I don't see it in how he always interacts with us as his parents.
So maybe when he goes away and he sees what life is like without you guys?
Maybe, we keep hoping. We keep telling, and this is his senior year. So a lot of the stuff that annoys him is how we have to remind him to do the things that he's responsible for. And I'm like, Jared, next year you're on your own. The garbage isn't going to take itself out. The dishes aren't going to wash themselves. The laundry's not going to get done on its own. We're just trying to prepare you, because if you don't master how to manage the responsibility of being independent, you're going to be at a loss. Yeah. And it's not easy to be independent.
Well, while you don't want this to happen in your own house, when he's in a dorm or wherever he's going to be, maybe it'll take a rat to come through his room or something because there's too much garbage or something. And then you go, crap, maybe I'm doing things the wrong way. Right?
Yeah, or you want to, bring a girl back to your room.
Yeah, and there's a rat. Right, and a rat walks through your room, and then you go, crap, I probably shouldn't do that because that girl ran out of here. Right. Let me start learning. And I think life teaches us through those types of pains.
I think so too, yeah.
Yeah, the other thing is maybe the day that your son is a father, maybe he'll see how hard it is, and he'll see that there's no manual. And he'll say, my parents did all of this. And maybe they'll start appreciating a little more.
Hope it's sooner.
Yeah, I know, because it might be a while for that. But, I look at it in potential phases. Maybe when they hit this, they'll realize it. Maybe when they hit that,
Especially now that I think they said 25% of 40-year-olds have never been married or had kids.
Wow.
So it's some crazy statistic like that. Wow. And, the world's changed a lot. And, when we talk, Amanda and I, about, one day maybe we'll be able to have the privilege of being grandparents, but the odds are not stacked in our favor, as well as they used to be.
Yeah, especially you got 2 kids. I got 4, so I got a chance. I got
a better chance.
Yeah, and I'll be a grandparent. We'll see what that looks like. The other day, less than a week ago, I put a post. Who knows when this airs? But I put a post at one point on social media about warning guys to not get caught up with gold diggers. Girls, there's a lot of young entrepreneurs, and the guys who will listen to this are mostly entrepreneurs. They're hustling and getting ahead, but they might get with the wrong girl. And vice versa could happen too, but I work with men, so that's who I talk to. And they could end up with a girl who wants a new handbag that costs $2,000, and they want a new car that costs $100,000, and it never ends.
Right.
And you responded that one of the things that attracted you to Amanda was that she was frugal. So talk about that.
Yeah. And interestingly, I think part of that is my father remarried my stepmother, who's been my stepmother since I'm 3 years old. I now call her mom. We have a great relationship. I love her. She's wonderful. But one of the things as a kid that I noticed is she was very attached to material objects. She loved fashion. She was a high fashion person. And they would inevitably spend a lot of money on clothes and handbags and shoes and jackets. And, she was in the fur coat business for a little while. And I could always appreciate that was what was important to her, but I knew in my mind I didn't want that to be important to my wife. And the reason why when I was growing up was because I didn't want the financial strain that came along with it. I think as times marched on, it's been the other way. So we had for a long time, Amanda, I would say, you have to spend $100 a month on something you don't need. And she couldn't even do it. And then last night we were going to an event for major donors to a charity, and she had bought a pocketbook recently, which was more money than she's ever spent. It was like a $600 pocketbook. And she was like, I can't believe I had to spend so much money on it. I'm like, Amanda, that's not an expensive handbag in the circles that you run in. It's very modest. And so even her mindset hasn't been able to shift as our success has changed, where she's still thinking frugally. We're planning a vacation to Costa Rica over Thanksgiving, over Christmas rather. And, to take the taxi from the company is $20 more than taking an independent taxi. So I'm like, Amanda, just take the taxi from the company. It's fine. Don't worry.
Guys are listening to this saying, how did you do this?
Yeah.
So what was it? A checklist process? What was in your mind at that time?
So when we met, she had a credit card from her parents and with no budget. So we met in college and, we'd go out to dinner. I would often pay because I felt that, that was my role in our relationship. I wanted to, provide that sense of, masculinity, I guess, in our relationship. But occasionally we'd go out and she would say, no, I'll pay. Really, your parents are paying,
Yeah.
But I saw how she treated their money. And, her parents are very frugal. They were always very modest in the way that they approached life. And I just found that to be a lot. I knew that it would lead me to achieve my goals much more successfully, that she wasn't going to pressure me to spend money when I wanted to save money.
Yeah.
And now it's the other way around. Now I'm trying to pressure her to spend money because we don't need to save anymore.
I one time put $500 bills on Jessica's night table. And I said, you cannot come into the house tonight until I want to see the receipts for clothing. And when I got back, the 500 was still there. She was, I can't do it. I can't spend the money. So we have a good problem.
Exactly.
We're doing something okay.
Yeah.
All right. I have a checklist that I've shared with my boys. I got to revisit it because I always forget one or two of the things. But I always tell them, it's up to them. But I tell them what worked for me. And one of those things, so I have to have physical attraction when I was dating but one of the things, she had to be kind to people, right? I wanted to know that she was nice to people, that she was hardworking. But one of them is frugality. And I share that with my boys. And I say, because look, at 22 years old, I had already built up something. I bought my first house. I put $32,000 down and I was renting out the rooms. I kept the main one for myself. But then 12 months later, I bought another house, 12 months, my third, 15 months later, my fourth. Now I was 25 years old and I had 4 properties at that point. That would not have happened if I had a girlfriend who was just like, no, get the new car, take me to France, take me, at 22, 23, 24, I needed to make sure every girlfriend I had, and definitely my wife, had to be on board with like, hey, we're going to sacrifice now to have it a little bit better later.
Right.
Not promising the world at all. But what I find is a lot of guys complain that, man, all I can find are gold diggers and this and that. But to me, it's like fishing. If you're attracting with your hot rod
What's your
car,
lure? Right.
yeah, what are you luring them with? I had a Toyota Corolla.
Right.
And that was cool because I knew the gold diggers were not interested in me. So good. Don't get interested in me so we don't fall in love, so that helped. All right. So talk about charity. That's a big deal for you.
Yeah.
You have mentors, and one of you told me years ago, you have a charity mentor. What's that?
Yeah, philanthropic mentor. Actually, I'm interviewing him coming up on a podcast that I'm hosting. So
Awesome.
We got paired through an organization that we both supported, which was probably one of the better outcomes. And one of the things that I found through getting engaged in philanthropy at a younger age was the ability to be in the room with generous people, and what a difference it makes to be surrounded by other generous givers, because it's hard to be in a room and know who givers are. But when you're at an event, like last night, I was at an event for the Jewish Federation of Broward County for their major donors. Everybody in the room is a generous giver.
Yeah.
Everyone.
They weren't invited otherwise.
Otherwise you couldn't get in the room. And, I've always found that to be inspirational and motivating. We also go to the Community Foundation of Broward every year. They honor people that make $1 million gift to the Legacy Society. And, to think about the generosity that these families are contributing to the community and wanting to follow in their footsteps and live through their inspiration and trying to figure out, okay, well, where can I make a contribution? So my mentor, he sends over 100 kids to college every year. Wow. And so now Amanda and I have been sending kids to college through his program. We have 2 kids in school now. Amanda has one that's graduating this year. And then we've got 2 more, so I guess 3. Wow. And it's been great to have that mentorship around figuring out how you want to make a difference. Like I shared, I was at that point in my life back in like 2016, 15, 16, 17, thinking, what am I going to do? How am I going to make a meaningful contribution to the world? And thinking it had to be through philanthropy. And then really what I took away in part from my relationship with Cliff, who stayed in business into his 70s before retiring, but formed this foundation kind of while he was still actively working, is that maybe my best contribution is to work with the people I care about most, entrepreneurs, make money from the value I'm creating for them, and then give that money away.
Yeah.
And that
everyone wins.
Yeah, that might be a better kind of circular, what do they call it? Positive cycle, right?
Yeah. What have you found about generous people? What do you feel is different about them? What's the power in being in that room? First of all, what are they like? And what do you get out of it?
Most people that are generous have achieved financial success. At the level that I'm talking about, when you're writing bigger checks, you have to have the money to write the checks. So there's plenty of generous people that don't get into those rooms just because they haven't achieved a level of financial success. So I think you get like this double filter of you've achieved financial success and you're willing to use it to help others. So what they have is knowledge and experience that was gained through their financial acumen, but then the generous spirit that they have, which often you find comes, I was in a room once for like the VIP donors before with the guest speaker. And one of the questions was, how many of you grew up either the recipient of charity or, being on the other side of the table, right? And it was the whole room.
Wow.
And what it led to was a conversation around, what about our kids? And so how do we get our kids to be in rooms like this? Because they don't have the same struggle. Yep. So without that struggle, they may not have the same motivation to create the financial success, even if they have a generous mindset.
Did you guys come up with an answer? Because everybody's going to want to hear that.
I think the answer for me, I'll tell you how I've applied it to our family, and two things, and one of which I know we share in common, which is, I tell my kids I'm wealthy and you're not, right? That you have rich parents. Which is really nice to have rich parents. It's better than having poor parents, but that doesn't mean you're rich. And so if you want to have financial success in your life, you're going to have to create it. But the advantage you have that I didn't necessarily have, or certainly that my father didn't have, is I've got an amazing network. I'm part of EO that we've been both part of. I'm part of YPO. I'm part of these, generous givers communities, right? So I know people everywhere.
Yeah.
And so my children have an advantage. If they have a need, I can make a phone call and probably get their need addressed. Yeah. And I want to use that leverage to their advantage, but I don't want to hand them money.
Yeah.
Because I don't think that they need it.
No, they got to want it. And they're going to enjoy life a lot more if they do those things themselves. But opening the doors for them is phenomenal.
Yeah, and I think that is the key that I've learned from working with lots of affluent families, is that when children have an expectation that they'll be wealthy by birthright, it changes their own level of motivation and their own willingness to learn and become accountable. And so I figured I don't want to create that expectation at all.
Yeah,
and
why try?
And I'd like to leave open the fact that I could change my mind when my kids are fully mature and maybe have kids of their own. I'd be happy to change my mind and say, I'd rather you have these resources than me give them to strangers.
Sure.
But absent that, the plan is to give it all away.
Yeah. And the good thing is that they're not going to be watching you on a podcast, so they don't even know that it's an option in the future. That's a good thing. I always say
No, I've told them, because the reality is Amanda and I are unlikely to give our money away while we're alive because we don't know when we're going to die, and we want to make sure we have enough. And so we work with the kids on what gifts to give and how much we might want to give to an organization, and we share that openly with them, and we've asked them to pick charities that they want to support, but they'll be involved in the giving it away, or they could be involved in the growing it and giving it away,
so they can give it later at an even higher level. So you syndicate real estate deals. Talk about that. And what's the name of the company?
It's Freedom Adventures.
Freedom Adventures. And what do you do? And how does it work for guys like me who want to invest in there?
Yeah, so I started much like you did in real estate at the turn of the century. Amanda and I bought a 2-family house. We lived in half and we rented half. I had the good fortune of getting $40 at the closing. I didn't have to put any money down. There was a loophole that I figured out. And then after that, we would go and buy another house a year. But it ended up not working to my strengths because I was building my career as an accountant. And I started to realize that on nights and weekends, I was dealing with tenants and tenant problems and repairs. And then I started doing the math. And in my day job, I was making like $75 an hour at the time. And in this job as a landlord, if I deducted $75 an hour for all the hours I was spending doing the work, I really wasn't generating a return on my investment. And so I shifted my mindset to thinking, how can I partner with somebody that will do the operations for me and give me a return on my investment that, makes sense. And what I ended up doing was buying into a larger real estate syndication. So I raised $1 million from my friends, and we bought a fractional interest in a large, I think my first deal was like an office deal. And then I did another office deal, and then I did an apartment deal. And then I decided, let me raise a fund. And so I put a real estate fund together, and we bought 18 assets under that fund. And then when the fund was over, I went back to individual real estate syndication. So I would find a building that I wanted to own through a partner that was going to operate it. And then I'd say, okay, my family's going to invest $100,000, $200,000, $300,000, whatever the number is. But I'd pass the hat around to my friends, and they'd put in $50,000, $100,000, $200,000. And together we would buy a building that someone else would operate. And so I've been doing that now, I guess, for 13 years, buying assets where other people are managing them over
How much
50 transactions, about $900 million worth of real estate.
Wow.
Yeah.
But you're not holding on to all of that, right?
No, we've sold a bunch. We still have, I think, about $500 or $600 million of assets that we've invested in. It's an interesting way to get exposure to real estate as an asset class for people that don't want to spend their time doing it.
Yeah. Like the investors that you have, like me, I've never changed out a toilet or unclogged anything, right?
Right.
Yeah.
And I don't want to do that either, right? So it's kind of finding a model that makes sense, that where you can invest with others.
Yeah, that's perfect. Now, something that I think is really exciting about you, when I think about you, I do think about real estate investing, and I think about saving money on taxes. You and your team looked at my taxes once and quickly got me a check for like $250,000.
Yeah, right.
And
Wasn't that awesome?
it was amazing because you could go back like 3 years, and we amended some returns, and it was a quick process. It took, I don't know, a couple of months all in, and I kept thinking this can't be real. And it was just looking at things a little bit differently. I think your team has some phenomenal people in it. That for me was a huge deal, especially at the time, this years ago. You must do that a lot for people, huh?
Yeah, all the time.
Man.
Yeah. We don't do it as much retroactively anymore. So we've kind of changed our business model, and we're much more prospective, but we still, help people kind of clean up the past when it's obvious. In your case, it was very obvious. Yeah. But what we focus on most are 7-figure income earners or 8-figure net worth entrepreneurs, especially if they're selling their company. There's so much they could do before they sell it and pay a big capital gains tax. So we're always working with entrepreneurs that are having an 8-figure exit, or entrepreneurs that are making big money, and just showing them things that they never heard of before. Because
so what are some of the simple ones that if you might be on your website or podcasts you've done, what can you share that's something simple that some guys, because you told me once in passing, and it saved me so much money, is it Augusta rule?
Oh yeah.
Yeah, so I rent my house now for my company. I have for like 10 years since you told me.
Yeah.
And it's awesome. I find whatever the going rate is, and I use it for, when I had the apparel company, it was for photography. We shot there, and I didn't know I could write that off.
Right.
And then going forward for meetings, it's phenomenal. That's instantly a couple $1,000s right in my pocket just for an accounting transaction, which we were already doing it. We just weren't putting it in the accounting.
So
what else?
That's the Augusta rule. That's where you can rent your home for up to 14 days without paying any income tax on the rental income.
But the company takes it as an expense.
As a deduction, right.
Yeah.
So that's a great rule. That's one I always like to share. Getting a second opinion on your tax returns, right? Just like you did, because if you have the same accountant and you trust that accountant, there's no reason to necessarily disrupt the relationship, but it's worth having someone else just take a look and see if you're doing anything wrong. But a cool one that I invented is clients of mine buy seeds, like tomato seeds or melon seeds. People always say, well, why would somebody want to buy seeds? It's, well, I give them a good discount. They only have to pay 25% of what they're worth. Well, still, why would you want to buy seeds even if you could get them at 75% off? Well, the trick is they donate the seeds to a nonprofit, and they get a deduction on their tax return for 100% of the value. So I have a New York City taxpayer client, and he just asked me to do the calculation for him. He had a 78% return on investment in his seed purchase to donation. Plus, he's feeding hungry people, right?
Wait, this is literally seeds?
Literally seeds. They get planted in the ground and they feed hungry people. Yeah. And so we call it dual harvest. Dualharvest.org is the website. And you can make money while feeding hungry people.
Okay, so the math on it is I buy $1 million of seeds.
Yeah, for $250,000.
Okay.
And then you have to wait a year before you donate it. That's just one of the rules. And in a year you donate it, you get $1 million deduction.
So if I'm at a 39% tax rate,
right,
I take off
$390.
Take off $390 off of my $250 investment.
Right.
So instantly in a year, I got a guaranteed.
Right. Yeah. It's the minimum like 48% return for Florida taxpayers. Yeah.
Wow.
Yeah. Pretty cool.
Yeah.
So I created that one. I have another cool one that I created. So maybe some of your listeners might have heard that Puerto Rico, people go to Puerto Rico. You had looked at exploring going to Puerto Rico.
Yeah, I was almost there. So anybody who knows me has heard that a lot.
Yeah. And so the reason people move to Puerto Rico is, one, they have a program where your business can pay a 4% corporate tax rate.
And zero federal.
And so I like living in Parkland, Florida. I moved here for a reason, and I didn't want to go to Puerto Rico, but I was like, man, this 4% is really attractive. How could I take advantage of it? And after 2 years of working on trying to solve this problem with another tax strategist, I figured out that there's this section of the tax code called the ROBS, R-O-B-S, which stands for Rollover Business Startup. And it allows you to buy a business inside of a 401k plan. And a 401k plan doesn't have to pay any tax on dividends, interest, or capital gains. So what I did is I started a business in Puerto Rico that pays 4% in taxes, but that business is owned by my Roth 401k plan, meaning I'll never pay tax on that money. So if I make $1 million in Puerto Rico, I pay $40,000 to the Puerto Rican government.
One time up front.
One time, 960 grand goes into my Roth 401k, and I can invest that tax-free for the rest of my life. I can take it out tax-free. Yeah, so that's been a brilliant strategy.
But you had to put someone on the ground in Puerto Rico?
Correct. Yeah, you have to source your income in Puerto Rico.
Yeah, that's amazing. You know, one time I heard you say, and this is so contrarian to what's out there, because when we're kids and we watch TV shows and cartoons, it's always like the bank's going to take over grandma's orphanage and everything's going to be horrible and people who have money are bad. But one time you said, I love money. You actually said it here earlier, but you said that. And I remember looking at you and going, wow, this guy's like, he says what we all think. So how come you're so easy about that? How come it's so easy for you? Which, by the way, changed my perspective too. Now I agree. I always agreed, but I didn't say it because that's taboo. How are you so comfortable with saying, yeah, I love making money?
I think it's trying to destigmatize it, you know, and it's, again, one of the reasons why entrepreneurs are heroes to me. One of the reasons I want to work with the 1/2% is because I know if I give them more money, they're going to do good things with it, because people that are successful, they utilize wealth in a way that creates more value for others. So it becomes the virtuous cycle. That's kind of the word I was looking for before, where, right, an entrepreneur who's successful, who now has millions of dollars more of capital, they're going to use that to reward their team. They're going to use that to, you know, negotiate for growth in their company. They're going to find ways to buy equipment that somebody else is going to make a profit on to enhance their effectiveness and efficiency and make their customers happier. And so I think the more that you give the resource of capital to an entrepreneur, the more benefit of that they're going to be able to produce in the world.
Yeah, society gains.
Yeah.
Another thing that I heard you say once that impacted me, it's that you have this confidence in yourself that at the time when you said this, I didn't have it in myself. And it was about your perspective, your positivity to making money in the future.
Yeah.
And you just say, no, I'll always make money. You could take everything away. I'll make more money.
Yeah.
How do you have such confidence?
I think Henry Ford was the first person that I read say, you know, when he became a millionaire, he said, if you take it all away, I'll become a millionaire again. And I believe that to be true now. And one of the first birthdays that I kind of celebrated was my 40th birthday, because at 40, and I was financially independent at 40, and I looked back at basically the 20-year working career that I had had from 20 to 40. I went, man, if this is what I could accomplish in the last 20 years, imagine what I'm going to accomplish in the next 20 years.
Where you have more capital to start with, more experience, more wisdom.
More network, more everything, right? More patience. And so I've become very confident that I know how to create value. And when you know how to create value, you just have to decide where you're going to implement that, and, you know, you're going to receive value in return.
And are you good at seeing opportunities? Do you see something, go, oh, that could be a business, or that could be an avenue I could take more business in?
Yes and no. I would say I've recently learned that the advice I've consistently received was to stay focused. So historically, I've always enjoyed the pursuit of opportunities because of the fun, knowing that it reduced my ultimate growth in my net worth, because being a shotgun is not going to get you the same results as being a rifle. And so now that I'm limiting kind of where I'm focusing, I think my success will become more significant, because focusing on this tax strategy for entrepreneurs has really been the opportunity I've worked around my whole career, but not really focused on. And now it's in some ways exclusively what I'm focusing on is how can I find the successful entrepreneurs out there that, you know, maybe they like their accountant, they're happy with their accountant, but they don't have a tax strategy. They just, they make more money, they pay more taxes. They make more money, they pay more taxes. Yeah. And when they ask their accountant what to do, they just get, you know, this is what it is.
Yeah. When I went through you guys, the first thing I was told is your accountant's fantastic. She does a great job. And she does. And I've probably gotten her 15 clients just from referring her out. But you guys gave me a different perspective. And now combining those two has been a lot better. You know, another thing I learned from you was regarding cash flow. I didn't know why when the market crashed in 08, 09 in real estate, and I had 6 properties at the time, no coaching, no guidance, no mentoring. You save money, you buy a house. You save money, you buy another one. That's what I was doing. I really wasn't sure why it crashed on me. Like, yeah, the market crashed. What happened? And not that you answered that for me, but indirectly hearing you talk about cash flow and the importance of cash flow. I didn't have that. I was negative on every property thinking, well, the values just keep going up. If I ever need to, I'll sell one. Well, that went away when they all got cut in half. And man, I was left there with nothing. I went to a negative net worth as recent as 09. So since then, learning that from you about cash flow, I look at everything from a cash flow perspective. How quickly do I get money back from it? And when do I break even? So I got to thank you for
You're welcome.
Setting me straight on that one.
I think it's a problem that a lot of entrepreneurs have as well, that ultimately when, you know, the people I speak with most often, when you say, what's your number, right? And you ask a group of people, it's 10 million, it's 20 million. You know, that's kind of the most common answers that I get. I believe they're answering the wrong question and they're trying to maximize for the wrong outcome. What they should be focused on.
So they're focusing on net worth.
They're focusing on net worth. How much cash am I going to sell my business for one day? Yeah. But the reality is you want 30 grand a month of income. You want 50 grand a month of income. You want 70 grand a month of income. Yeah. That's what you want to be optimizing for. And so that's really one of the messages of my new firm, Wealth Thrive, is, you know, it's important to have a tax strategy. And it's important to have your passive income strategy because they're going to play together. Depending on how you're going to generate your passive income, you need your tax strategy to be coordinated with that. Because if you want to be a real estate investor, well, that's an awesome tax strategy. But if you want to be a public stock market investor, well, you know, to generate enough income out of publicly traded stocks and bonds, you probably want to use like tax advantage plans like Roth 401ks, where you're not going to have to pay tax on your dividend income or your capital gain income. Real estate, you don't need that, right? If you're going to invest in small businesses, startup businesses, well, if they're C corporations and you own them for 5 years or more and you're one of the founders, you're going to qualify for QSBS, qualified small business stock. You're not going to have to pay capital gains tax on the
time of the sale.
At the time of the sale on the first 10 million in gains. So that's a great strategy. Well, now you don't need a different tax strategy to avoid cap gains on your investment. So what we help the entrepreneur figure out is both of those things. So your tax strategy along with your passive income generation strategy.
Fantastic. And, you know, the average guy or the average entrepreneur doesn't know about these things, nor, you know, I've heard of all that, but I don't remember them. Like you bring it up, like, oh yeah, that's a thing about, that's why it's good to have the person who knows how to do those things. Like you guys help them with that. In my book, 31 Days to Become a Better Man, there's a financial clarity day. It's the longest chapter, 15 minutes of reading maybe, because it's just daily reading in action. And in there, I talk about you and how we were on a retreat together and you had to sit down and write out a 10-year plan and what are a day in the life 10 years from now. And so that's the challenge for that day for the guys to do. And I credit you for having us do that. It was very helpful, very insightful. So I mentioned in there, not only that you helped us with that I said you're a friend, an investor and a consultant, all these things that I classify you as. If other people want to meet you, like I know you, how can they get a hold of you? Maybe they're a good fit. They're a 0.5% type of guy with making good money, or they want to sell their business down the road. How can they get a hold of you?
Yeah. So getting a hold of me is always hard.
Yeah. Your company, your guy, your team.
The easiest way to kind of figure out if my team can help you is to go to talktofreedom.com.
Talktofreedom.com.
Yeah. And we'll, get on a call. We'll try to understand your situation and we'll figure out how we can help. Usually within the first half hour, we know whether or not there are opportunities for us. And pretty much if you're a U.S. taxpayer making $1 million or more of taxable income, I can guarantee you there are things you're not doing that we can show you that you'll want to implement.
Yeah, that's fantastic. And your team is fantastic. They don't need to get a hold of you. You got people.
Yeah.
So
I was going to say, it's one of the reasons I had the confidence to start this business was because I knew if I built a team that individually had better expertise than me at the various components of what I knew how to do, then not only would the people I'm helping get a better outcome, but I could do what I really like, which is talking. I like sharing my story. I like educating entrepreneurs about what's possible. So I spend a lot of my time content, writing books, giving lectures.
How many books have you written?
Just released my 5th book, Exit Rich Beyond Money.
Fantastic. So what is your last question? What does your day look like? You don't have to work, you're not in the day-to-day grinding anymore. What do you do all day?
So today's a good day. Today's Friday. Fridays are my day to myself. So I tend not to book any meetings other than things that are of interest to me, which being with you is always of interest. So I woke up, took a long walk, had a couple of phone calls with people that actually another EO member that I got connected with just to get to know you, took a steam, worked out, had some breakfast, came here. I'm packing for a vacation later. Wednesdays, I like to spend with my wife, Amanda. So we'll usually wake up, go for a walk, go out to eat, go for massages, go to the beach, something like that. And then Monday, Tuesday, and Thursday are kind of my work days. So I have scheduled meetings on Mondays with my team. Tuesdays and Thursdays are meetings with, podcast interviews or lectures that I'm giving or content that I'm creating or mentoring the team. And then my weekends are for the family. And with a son that plays travel soccer, a lot of the weekends are traveling around to watch him play soccer.
Yeah, all over the place.
Yeah.
That's fantastic. This would have only felt to me like a dream when I was grinding to hear someone say Monday, Tuesday, Thursday, and then Wednesday's a date with their wife every full day.
Yeah.
And then Fridays just doing whatever you want to be doing, and the weekends with your family. That in itself is at least in the 0.5% of achievement for a man, a family guy, to be able to have that freedom. So thanks for that inspiration. I think that's not a pipe dream for guys. I think you could get to that, but that means
it has to be a goal.
Yeah, it has to be a goal, and then you work toward it.
And, going back to kind of tie it back to my wife. So when I was goal setting as a teenager, my only goals were financial and weight, financial and weight, maybe weightlifting, and weight. But when we had children, she really helped me focus on different metrics. And my KPIs became how many breakfasts did I have at home? How many dinners was I with the family? How many nights did I sleep in bed next to my wife? How many, soccer games was I at? So I started measuring what became important so that I would measure success not just on my balance sheet, because the guilt in a way that I would kind of tear back to is, if I could be working and making more money. And she was like, but we don't need more money. So why don't you work on what's most important, which is spending the time with the people you love and you care about and enjoying life.
That's a fantastic lesson. Good thing Amanda gave you that so you can share it with us. So I used to measure things like that too. And one of them was when I was still in it, I had the company, I started measuring how many days I could wear shorts and a t-shirt, because that told me that I don't care what anybody thinks about me, as opposed to the beginning where I had to dress up properly because I don't know. And then same thing, how many dates, how often I can be home. I'll tell you this, your kids are still young in the sense that they're both in school, but when they get to that age after high school, something you will miss probably, I miss it tremendously, is having, and for us it's 4 kids, having all 6 of us at the dinner table. I miss that so much, and I can't make it happen hardly ever anymore. Because, there's 2 adults,
right?
And other than my wife and I, but Ryan and Adrian are big kids now, and they're on their own. So yeah, to get that all together. So to be so intentional, to measure it, because now you're going to focus on it. I love that. And it's not just a balance sheet. It's not just a P&L.
Yeah.
Thanks for sharing that. Thanks for being here.
With pleasure. And if your listeners want to follow me on LinkedIn or Instagram or Facebook, I produce a lot of content there. And if they want to get on my mailing list, I produce a quarterly update about what's going on in my life, and I put on a lot of webinars and events. They could go to that Talk to Freedom website.
Talk to Freedom. It's all there. All the links.
There. Yeah.
LinkedIn, Instagram, great. Talk to Freedom. I'm on your email list. They're always good things. And the other day I was with the Brotherhood guys, and my friend Paulo, who's in there, brought it up. And he's, I get Noah's emails. And some other guy said, me too, because we did a thing together. So thanks for putting out all that great content. What is it?
Talk to Freedom.
TalkToFreedom.com.
Yeah. Thanks for having me.
Thanks, Noah.